Hello, everyone. Welcome to howtotrade.com. I'm Shane Vernier, and this is NFP Live. Today, we're going to cover the US Non-Farm Payrolls the first NFP, the first jobs report of the new Trump administration. We're expecting some fireworks. If you listen to the media, if you listen to me, then basically I'm not expecting much at all. I think this number is going to be sort of in policy or ho-hum or maybe even a little bit bigger than we thought. But here's the key about today. If you turn off the webcast right now, the key thing to look at today is we have seasonally adjusted jobs numbers according to new parameters. That's new for 2025. They change it every single year. So right now we're starting with a fresh slate of numbers. So when we do our comparative analysis next month and look at this month's numbers with our downward revisions and upward revisions, it's really set the table for a period of uncertainty with regards to U.S. labor. So if you don't take anything else away from this live stream, understand that the numbers, nobody else is going to tell you this. The numbers don't matter. What matters is the action, the volatility, all the price action that gets generated by a report like NFP. That's why we're here. We're here to trade. We're here to look at our levels, see if the market comes to us. I've got a bunch of levels really strung out for you here. We're going to look at 920 convergence. 920 confirmation with RSI. We're also going to look at 5813 crossovers. We're going to scalp those on real short time frames after the news drops, but we've also got some macro levels to look at. And for those of you that are brand new to NFP and don't know what it is, I'm going to run through briefly what it is. So good to see everybody back in the room. Trading FX. Is it a buy or is it a sell? I don't know. I like to sell. I make more money selling than I do buying, but hey, that's just me. Let's see. Turksha, go sell. Oh yeah, dropping some harsh language in the live chat. Well, sometimes that's the way it works. I know that Tuesday I wasn't feeling real great and I was dropping it. Let's see, Dibble. Always a pleasure, Dibble. Been a while. I'll get to your private message as soon as we're done here. And then Bobby Bob, good to see you and everybody at the How to Trade Trading Room, and also online in YouTube world, on Twitch, on X, wherever you may be. All right, guys. If you need to trade, the first thing you got to do is you got to get a broker. Check out our partner broker, Switch. Absolutely, tons of bonuses. High leverage, up to 500 to 1. Spreads are tight. You can either choose real tight spreads or commission trading, whatever you want. The bottom line is this: they've got something for everything. So get in there. Check out Switch Markets if you need a place to trade. It's a pretty darn good out if you're an international client. If you're here in the United States, we don't have access to Switch Markets. That's okay. Check out Oanda. That's one of our recommended brokers. Go to How to Trade. Ask me any questions you want. If you need a futures out, we're going to look at some futures contracts as well today. So that's pretty much where we're at. Stefan, good to see you. Claudio, always a pleasure. All right, let's go look at some key levels first, and then we'll get rocking with NFP. T-minus 8 minutes. Bobby Australian, good to see you, Bobby. Welcome. Yeah, we've got some old friends. All right, I love it. In any case, right here, Bitcoin. Take a look at Bitcoin. Now, the reason why I would pull a Bitcoin chart is because everybody's trading it right now, but also this is an interesting market dynamic, meaning we are in just an absolute log jam for about the last 90 days around 100,000. So what that means is we have a range-bound market. However, we're still bullish. We're still bullish because the uptrend, this monthly uptrend, no joke, goes back to about October 2023. Then we absolutely exploded, compression, break. And for the last few months, we've really been on a tear with Bitcoin. 100,000 is the key level. So if just real basic technical analysis, and I love easy. Easy is always better in my eyes. What do you have? You got rotation. 110,000 on the top side. We would love to buy the bottom of this range, 38%, maybe 86. But take a look at what's really happening here. The bulk of your trade, somewhere right in there, between 100 and 110. Right now, we're beneath that. So I'm curious if NFP pushes us back up into this range or gives us a deeper pullback. I will just go ahead and issue a high buy recommendation down here at 38%, probably 87,000, maybe 88, 88.9, something like that. But that 90,000 level, that was a pullback we nearly got last month. If we're patient, we'll get it. You want to buy Bitcoin, you don't want to sell. We'll go ahead and pull a TPO chart here. And for crypto, they don't really give you TPO, time price offering data. But I would bet a dollar and a dime that a majority of the trade over the last 90 days has taken place right around 100,000. That's key, guys. Always remember your key numbers. Don't forget them. They're absolutely imperative. Every single day I show up to the market, and key numbers is what I'm looking at. Also, we've got the Australian dollar. This one's in play. This was a trade idea that we had. I believe it was earlier this week. I adjusted the levels because our macro technicals have shifted. 38% right up there, right around 64. We had a trade idea out on that. I'm looking at price 63.75s. That's a pretty good shorting area. And you've got a real similar type of a setup here with the Euro USD. These are macro levels, but you you always know where your macro levels are, because when they come into play with a big-time release like NFP, then we're in the money. So 105.70, 76, 75, probably 105.50. We're a ways off of this one in the Euro USD, but if we get a trend going, maybe a daily trend takes us up, and we've got a great shot in early next week. So I'm looking at that one as well. And then also, this is the interesting one. Now, this is the one we don't really know what to do with it. Do we go long right now on the dollar CAD? Incredibly risky, but right now 38%, 142.71, that 142.75-ish, that area right in there is ripe. That's a pretty darn good zone, and if you wanted to pull a 4-hour chart, you could see that we have been just hitting this zone. Absolutely a beautiful trade. But let's see, back on Wednesday, beautiful trade there. I'm still watching that area. So we're watching the dollar CAD closely. I want to see, that's actually going to be the one that I'm going to be monitoring really as the number drops. There's your 5-minute chart, dollar CAD. You can see our support zone's way down there, but if we get a chance, if you're saying there's a chance, you're saying there's a chance. All right, if you're brand new to the markets, let's just run through what NFP is and what we can expect today. Basically, it's the number one labor metric out of the United States. It counts up all the folks that have jobs. It's supposed to really show you what the job market is doing with regards to economic prowess. Remember, big NFPs mean you're in a growth cycle. Small NFPs mean that you're in a series of contractions. So what does all of it mean? Well, I mean, it's relative. Always remember, everything in the market's relative. You know, what's $100 crude oil if we've been trading $200 for the past 20 years? See what I mean? It's all about relative analysis. There's two things we need to remember today: projections and the previous release. So we're going to be looking at the previous release. That's going to be December's number. This will be January. Remember, 1 month removed. So we report January's figure in February. I'm interested in a couple of things. The previous release doesn't mean much to me because that's what the old metrics, the old way that they measured it for 2024. But the projections, that's what's going to really be the key today. So how does it impact the Forex? Listen, if NFP comes in above expectations, if we shatter it, what's that going to mean? Bullish USD. If it's below expectations, bearish. Why? Fed policy. Big jobs, that means we're growing. That means the economy's booming. The Fed can afford to raise interest rates. That makes the U.S. dollar stronger. Now, what does that mean to equities and commodities? It's exactly the opposite. If we're above expectations, that means we're going to raise rates. Theoretically, that's going to put a cap on stock prices or send commodity prices down. I think we're more along the lines of maybe just slowing down some of the bull runs that we've seen in gold and equities. But if we're above expectations, now if we're below, it's the opposite. That's bullish. That means that we're going to the moon. Why? Because we may cut interest rates and pump more money into the system. It's that simple. So what are we expecting for today? Today, you're looking at a previous release of 256,000. I threw a flag on that. I have major questions on the validity of that number, but I'm a skeptic by nature. I've been trading a long time, and I've seen a lot of BS stories. That's one of them. So I expect this to be revised down today. If it doesn't happen, that's cool. That's all right by me. I mean, we're going to trade it. Projected today, though, we're looking for 169, which is well beneath the previous release by about 100,000 jobs. I don't know what's going to happen here. As far as can we project a number today? I don't think so. I think it's just it's a swag, a scientific wild ass guess. That's what it is. So 169, that's the industry's best swag. We'll see if it works. I don't expect the unemployment rate to move at all. 4.1. Where the rubber's really going to hit the road, it's going to be next one. The next one's going to be the blockbuster report. This one, I don't think it does much of anything for anybody. That's my opinion. All right, Canadian dollars coming to us. Let me see right here. The XAU gold is gold a buy or a sell? You know, we put out our first losing trade idea of the year. Came across the board yesterday, and it was very frustrating because it happened during a news cycle. We had announcements of fresh pretty much sanctions going on Iran and some really tough talk out of the White House. And what happened was it brought incredible action to the gold market. So if you wanted to be one side or the other gold and you had the deep pockets, you want to be long. You want to be holding longs. However, right now, you know, if you're trading leveraged derivatives like all of us are, you can't hold things into perpetuity. So I would look at my 30-minute chart right here is where we got hurt yesterday. Very frustrating because we had a daily support zone bid. For me right now, I would be in a holding pattern. I'm still bullish. There's no reason not to be bullish technically, but I can see the bearish side of this market. I really can. The question is when do we get it? I think we've gone way too far to not test 3,000. So if I was looking at gold, and I do every single day, trade gold futures, you're looking right here, 38%. That's still a strong level. Unfortunately, we just didn't have enough stop loss, and we ended up getting stopped out on that trade. unfortunate. Really frustrates me because our level worked. We just needed to put probably a little bit longer leash on it. But when the volatility is that hot, you can't afford to be losing $5,000 or $10,000 on one trade. So we had to dumb that one down, take the loss. If I was going to make a choice going into your NFP, probably I won't even venture a guess. I think you probably get a correction here, 28.40, somewhere down in there. That's a beautiful bid, so we'll be watching that level as well. So I want to watch the Canadian dollar. That's going to be one that's in play for me. More than likely, I think we're going to get a shot at our support zone, and then we've also got gold. So 4, 3, 2, 1. Okay, what do we got? Okay, there's negative price action, and here comes the Canadian dollar coming right to us, right to our support zone at 142.71-ish. So you're going to be looking probably for a nice scalp. How would I execute? Probably looking for 25 pips or so if I could get long right in there and just sort of judge price action if you can get it. And then remember, judging support and resistance levels, trading them, it's very tough. Jay Holden, 143,000 jobs, no kidding. We're going to go ahead. We'll read through the report here in just a second after we start trading, but 143,000. So it's a low ball number. That means those new metrics are definitely going to take a bite out of crime. And right there, you can see that's exactly what we wanted to get done with the dollar CAD. We just didn't quite get the follow through. Good thing for us, we've got a couple other ways to scalp the action, and we're going there right now. Absolutely fantastic action, though. What was the low there, just out of curiosity? That's frustrating to me. Not much, is it, when you're trading 142.85, and we were right down there at 142.71, so we were looking probably at 75 buys and just didn't quite get it, but fantastic action. We're still watching that. We still may get it. Okay, this is a strategy that we've used, or really has been popular with us on YouTube, and this is the 920 crossover. I've added RSI confirmation because it's important if you're going to trade crossovers that you understand what exactly a confirmation is and when to be looking at a market. Meaning when we bring in a confirming device like an RSI to tell us when to get involved. So RSI is as easy as it gets. If we're above 70 on the RSI, we're looking to sell. And if we're below 30 on the RSI, we're looking to buy. So right here is going to be a textbook, pretty much a textbook example. It looks like we're going to be in oversold territory. You'll notice our RSI is sort of trending south. We're beneath 30 right now. This is a 1-minute chart. This is as risky as trading gets. Right now, we're in we got to wait and see where this close is, but we should be in oversold territory right there. 6, 5, 4, 3, 2, 1. Okay, what do we got? All right, we're right on the line, so we're going to have to wait another minute. But if, in fact, we do get down into that oversold territory, then we're going to look for that 9 EMA to cross the 20, and that's going to be our signal to go long. Now, right here, NQ futures, if anybody is a NASDAQ trader, pretty dangerous time to be doing this kind of thing. But 1-minute chart, you've got the same type of strategy here, RSI. Now, what's going on with these charts? I'll tell you what, I've had more issues with TradingView that I can shake a stick at here in the last couple of days. So in any case, our RSI indicator is a little bit messed up here. Something happened with our margins. That's okay. What we're going to do is we're going to do this. Got to be able to think on our feet, but definitely know your platform. I've had more issues with this platform over the past several days than I can count. So I like TradingView. TradingView is probably my weapon du jour, but I'm not real big on the functionality lately. Okay, so right here, E-mini NASDAQ futures, extremely, and I mean an extremely volatile product. If you've ever traded it, then you know the ranges are huge. 1-minute ranges are huge. So right in here, something like this, we're in oversold territory. So what we're waiting for right now is a crossover of the 9 over the 20. As soon as the 9 crosses the 20, then we're in business. Then we're absolutely in business. So we're looking to trade, of course. We always want to trade, but we've got to wait. We've got to wait until things are right, and we're going to look at a few of these products to see if we can actually get a trade. One of the things that we did on a video, or actually a few videos back, was we coded some of this stuff. And the coding makes life a little bit easier if you're interested in potentially trading a system. Something like this really makes life easier. Now, if we were looking at that same NQ, that E-mini NASDAQ, right in here, you've got your 9, you've got your 20, and we did some coding on it. We did some coding. We were looking to shade the inside of this We wanted to shade the inside, the distance between the 9 and the 20. That's our trend indicator. The fatter that is, it means that's the stronger trend, okay? And then we've also wanted to code our buy and sell signals. Very simple. The first bar after a crossover is going to be a big purple candle. That's going to be your sell. Now your first bar after the 9 crosses over the 20 is going to be a buy signal. There's your buy. So you've really got a nice coded, really a nice coded deal there. Now, if we wanted to go ahead and add our confirmation device, we just go up here to indicators and go right down to RSI, and it's really fairly simple. You just click on it wherever it is, RSI relative strength index right there, and that's going to be your confirming indicator, RSI. And of course, all my colors are messed up because that's, we make videos, and that's usually how it works. In any case, that's an interesting little functionality. So if you were on like a 1 minute chart and you were trading it without any sort of I'll let that load up for a second here. But without any sort of confirmation like that RSI, that could really help you. Okay, back to our Great Britain pound trade. Do we have an opportunity here? We're in oversold territory. We're looking to get the buy back. All we've got to do now is we've got to get the 9 to cross over the 20. That's it. Get the 9 to cross over the 20 and we're in business. So I'm watching relatively closely here. This can happen at any second. So what are we going to be looking to do? We're making a video right now that's going to help you improve your entry points on your RSI, specifically the 9 EMA strategy, and we're going to use Fibonacci retracements to help you get a better deal on these trades. But right now, what we're going to look to do is just go with a market order on the bullish close. So what we've got to have is we've got to have a bullish bar close above. Well, that's not necessarily true. You do need a positive close theoretically, but you're probably going to get that with the crossover. So in this instance, it's not a true 9 EMA. We're just waiting for that 9 EMA to cross the 20, and then we're going long. Let's take a look at gold. As far as gold goes, now this is another strategy that we're working on a video for, and this one will be out relatively soon, probably in a couple weeks. But this is the 5-8-13 triple moving average strategy. I really like this strategy. The 5, all you need is the 5 crosses over the 8. All right, that's your trade. Shane, what about the 13? The 13 is critical. You've got to have price close above or below all 3 moving averages. So in this case, if we were looking to play a break right now, we are. Okay, gold is moving a little bit higher. This would be a 5-minute chart. We were in oversold territory down here. You'll notice right here, we were in oversold. Boom, boom. And now we're looking to buy. So if we do get the 5 to cross over the 8 and a close above the 13, then we're looking to go long. All right, let me see right here. 88, how you doing, 88? I'm in a palladium short at the moment. Should I stay in based off of the report? I can't advise anybody to hold their positions or sell them based on this NFP report. And the reason why we can't do that is because when the orders hit the market, when the order flow hits the market, we run into a lot of different issues. Remember, there's order flow. There's people going into trade. When those orders hit the market, what happens to all those resting orders at the market? They get triggered. Then you have the momentum algorithms pile on, which are computer operations based on momentum. They want to see momentum in the market. And when they see a market break one way or the other, they're either taking trend following or counter trend approaches to scalp it. So what you get when you get a big release like NFP is a lot of vibration. And that can be absolutely, it can be hell on earth to try to trade that stuff and pick a direction in the market. In my view, it's impossible. You got to wait for the market to sort of shift out. So right now, we're looking at gold on a 5-minute. I want to give this thing, 5 or 10 minutes before I'm interested in getting in the market. Right here, take a look. I mean, look at that price bar. That's absolute chaos. That knocked out all the shorts. It knocked out all the longs. Now maybe we're starting to pick a direction. That's what we're looking for. We want the market to take a direction. Let me see, Australia dollar, US dollar. Yeah, I'll take a look at that. Calvin, gold cutting high and low. Absolutely, Calvin. That's an astute observation from a seasoned gold trader. You know exactly what happened right there. Bang. All your retail shorts gone. All your retail longs gone. And now what's happening? The market is starting to choose a situation, starting to choose a direction. So we can actually use a 5-8-13, something like this, to potentially get in on a gold trade. So let's say if we didn't want to wait for a 5-minute, and it looks to me like we're potentially going to get this in another minute 27 or so. But right here, we've already got our 5. 5's a red one. 5's crossing over the middle, so this bar close is going to be critical. If, in fact, we do close right where we're at, and we get that crossover, the 5 to cross the 8, the 8's the blue one, we close this bar above the purple, the 13, then we go long. So if we're going to do that, how are we going to do it? Well, for just the sake of simplicity, we're just going to throw a market order in. And we're going to buy this thing. Remember, these are demo dollars. We're just trading this on sim. But we're going to go ahead and buy this thing and see what happens. And that's the bottom line. It looks to me like we're going to get it. So do we get the crossover? We got 46 seconds left. Now, is our entry going to be the best entry it can possibly be? No, it's not. No, it's not. And this is going to be a high-risk trade because I'm going to show you where you're going to have to put your stop loss to make this thing work. And right now, if this trade were to go, your stop loss to honor sort of how the system works, you're going to have to go with an initial stop down there. That's a big risk. Dial your leverage way down, you know. So what should my profit target be? I mean, this could be a true day trade. You can see you're already sort of trading at the top of market structure. Is it a good idea to take the trade? Well, we need to trade to make money, right? One. Okay, there's our crossover. We're going to go ahead and buy the market, and we'll see exactly what happens here. Once again, ignore my leverage. That leverage is demo dollars. We've got to wait. Now, we've got a couple of things we have to do. Number one, we have to understand what we need to get out of this market. So if we took that buy right there on a 5-minute chart right after NFP, what would we do? Our initial risk's got to be down here beneath this swing low, this NFP bar, all right? So you're down there somewhere right around 28.52. Definitely shade this a few pips, so maybe put it right in there. I don't want to see anybody get stopped out by a pip, some noise, some stop hunting before you get the big rally, okay? So if we're long from right here, right on the bar open, or right on the bar close, if we're long there, what is your risk theoretically? 67 to 51, something like that. You're going to have to get some serious points out of this. You're going to need $16. This thing's going to have to trade up to 87-ish to make this trade even remotely worthwhile, and that's just with a basic 1-to-1, something like that. Now, if we were interested, say, in making a better trade, and this is what this week's YouTube video is about, can we improve our entry point? Let's say, yeah, you could wait for the market to pull back to your moving averages. You could go long from there. You could wait for the market to converge with a Fibonacci level like 38%, like 62% or 78%, and you can go long from there. By doing that, what do? You cut your risk. Instead of going long from 69 or whatever we're long from, you're long from 62. Instead of being long from, 69, you're long from 58. You're long from 56. The bottom line is this. If you get into a choppy market or the market doesn't have any follow-through like what we're seeing right this minute, with crossover strategy, you're in big, big trouble. This one sort of fit the bill, so we took the trade. You can see our leverage is absolutely huge. But look at the pullback. Pullback right to those moving averages. Maybe that was your best entry. Hard to say. Hard to say, guys. That's for sure. Let me see. A 10-year and 2-year moving up. The yields are moving up slightly. I mean, it's really early to say, Calvin, how to get a good read on this. Let's go ahead and take a look at the report and see if we can glean anything from this wonderful, wonderful first January of 2025 opening report. All right, here's the summary. Total non-farm payrolls rose by 143,000 in January, and the unemployment rate edged down to 4%. So that's the big thing. The rest of it, the actual jobs numbers, who really cares? It's the unemployment number. 4%'s huge. That's basically the Fed's goal. So the Fed feels like they can do anything right now. I think that with a 4% unemployment rate, if inflation is persistent, this plays into that idea that they can stay higher for longer. Their rates can stay higher for longer. That's absolutely key, and that's critical. If you're interested in understanding the fundamentals of a jobs number, that's vital. The jobs number feeds into Fed expectations. Will they hike rates? Will they cut rates? The rest of the world's cutting rates. It's the way it is. If the Fed... This is sort of more ammo just to hold rates where they're at until the summertime. That's going to lead to a bullish dollar. Right here, I'm looking at the dollar index. We're up around 107.82, so up about 0.10%. Not really a huge deal. Our gold trades in complete rotation. The markets, this is just sort of what it's going to be. I don't think you're going to get a big reaction out of this number today. Stock futures up about a quarter. I just don't think you're going to get much action off of this. Maybe later today, but I don't see it right now. In any case, let's go ahead and go to the key thing that we've got to really evaluate here. All right. So they're always revising these things. All right. And there's reasons why they revise it. They change the parameters. They adjust for seasonality, and they adjust a bunch of other factors in it. I don't necessarily believe that the true number, like what we got today, is definitely just a preliminary figure. We don't really know what the job situation is, and we won't know until next month, until we revise this thing. But this is what the changes were for today's report. The change in the total non-farm payroll employment for November was revised up by 49,000 from 212 to 261. The change for December was revised up by 51,000 from 256 to 307. Come on. With these revisions, employment in November and December combined is 100,000 higher than previously reported. Monthly revisions result from additional reports received from businesses and government agencies. Here's what's going to happen next month. You're going to see a really bad NFP number because it's going to be the first real full month that you've had the new administration in the White House. This doesn't surprise me at all that we're padding the numbers from the end of the previous administration. I don't know that this is necessarily typical, but it's definitely something that's to be expected. As far as what does all this mean, you're going to see a major downturn in unemployment here in the United States. You're going to see it for two reasons. Number one, the federal worker layoffs the new administration's conducting. You're going to see a lot of folks hitting those unemployment rolls. You're also seeing a mass immigration, deportation. You're going to see a lot of those jobs are going to show up. They're going to show up on these rolls somewhere in some fashion. I would make book on it. I would bet on it. So for me, I'm looking at this, and it's almost a laugher to see us revised up that high. That's a laugher. They know darn good and well those numbers were suspect, and the real question is this. Are they revising last year's numbers, November, December, using the new revisions to establishment data parameters? I don't believe any of this. So you can see right here. Look at this one. The year-over-year change in total for March of 2024 was revised from 2.9 million to 2.3 seasonally adjusted. Do you see the game? I know I'm not explaining it very well, and it's very difficult to understand this stuff, but understand the game. They're always changing these numbers, and the question of, is this scientific or isn't it? I don't know. I'm going to leave that up to you guys to decide. Get in here and unpack these figures if you want to do it, but to me, this looks like complete talking points. It really does. So we'll take a look and see what happens next month, but I'm already getting ready for it. Get the popcorn out. As far as what will this set of numbers do to the markets today, I'm just not expecting anything. But we're seeing the NASDAQ pop a little bit higher at 0.54%. That futures contract's definitely been rocking and rolling. The futures is actually flat, but the US 100's up. So this is going to be an interesting day. This is going to be an interesting day. As far as the gold trade goes, absolutely getting clobbered. This is why they make stop losses. Not out of the trade yet. Down there's your swing low. Basically, we took a long, but you could have definitely got a better entry on this one. Let me see. T. Marina, I know exactly what you mean. Only the algos running the orders know, and that's absolutely true, Calvin. The algos that run the orders, they know all. They know all. So we'll see. We'll see which way this gold market breaks. If I was going to pick a side, I would want to be long. Our little strategy told us to be long. We'll just wait and see what pans out. Right now, it doesn't look too good. All right, let's take a look at a few of these other contracts. This is sort of what we had. Our code makes this 920 strategy really easy. Check out that YouTube video if you haven't seen it. Something like this, though. You had sort of a buy there. So what would the trade be? This is without confirmation. The 9 crosses over the 20. There's your buy in the NASDAQ. So you have a couple of options. Number one, you could have bid right there. Number two, your stop loss is probably going to be beneath this previous swing low. In this instance, I like this a lot better than putting it beneath the NFP. But there's a lot of retail traders that just put their stop losses underneath that NFP report, and they're taking a shot, maybe get a trend day up. I think that's really risky because everybody knows where this NFP low is, and it just, like Calvin was saying just a little bit ago, these candles right here, those sweep out the shorts, those sweep out the longs. Almost guaranteed that you'll see a shot down here and then maybe a reversal. I think a great place to buy would be down at that NFP low. So the idea, like I said, I promoted a couple times, I won't mention it again, but the next video that we put out is going to be how to use your 9 EMA with some Fibonacci's to improve your entry point. And it's all about cutting your risk down. We know where our stop losses are. We know when to get into the market. Now we just got to know, do we have the best possible entry? And I would say 80% of the time, buying in right there. It's not really your best entry. So we're going to talk a little bit about how you can improve it. All right, let's do a quick around the horn, see if any of our levels came into play. Gold right here. Here's your daily, still holding in positive territory, up about 0.25%. I wouldn't be surprised if we rally up for the rest of the day and maybe take a look at yesterday's high. As far as what can we really look at here, that I still love that bid at 38%. I'm watching that closely. Australian dollar, did we get anything out of the Aussie? Not really. We didn't get a big enough pop, but we're still right up there for the sell. That's more than likely going to come into play next week. Euro USD, same situation, premium selling opportunity up here. But these are all going to be for next week. Great Britain Pound USD, this one was sort of active. We do have a hot sell right up there. We just missed the other day on Wednesday, but that's okay. Market's going to come to us. As far as, what can we really look at right now to trade the Great Britain Pound? Well, we did have a real nice a real nice range here. And there was your BOE interest rate decision. Still looking at 62%. You can see we hit that on the nose. Beautiful trade. Now we're just sort of in rotation. Should be an interesting day for the pound. If, in fact, the U.S. dollar gets some of its swagger back, which I don't necessarily believe we're going to see a move today. But if we do, 123.75s. It's about 50 pips away. You could probably buy that and get away with it. Just be careful around yesterday's low. You could definitely get a breakout down there. Let's go to the Swissy here real quick. I always like to check in on the Swissy. The Swissy is a great pair. It isn't always tradable. A lot of times it's really sort of stubborn and gets into rotation. A lot of dojis, a lot of hammers. But something like this, this is one area that I really am fond of. I love monthly double tops and triple tops. Absolutely love them. And look at markets have memories. Back that was in September, monthly high there, another high in a test. You can almost qualify that as a test, but I think if we break above last month's high and you get right up there, right around 92.50-ish, 92 to 92.50, that's going to be a pretty darn good sell as well. So that's sort of a quick look at the majors. As far as our gold trade, how's that looking? Yeah, this isn't unexpected. You got the big kick out of that initial sort of sugar high, that buzz. There's your move. Now we're compressing inside of this range. So moving forward, if you are trading gold, I would definitely mark this on my chart. You're going to want to mark that NFP high and that NFP low. You're moving sideways. That's going to be the range to watch. Do we break out to the bull? Do we sell off down to the bear, wipe out that NFP low, and then rebound? Anything's possible. Absolutely anything's possible. But, this trade's it's making a comeback. So we'll see exactly what happens. All right, everybody, I'm going to go ahead and sign off here. I'm going to be out of the office on Monday, so check your stream schedule. I'll be back Tuesday, Wednesday, Thursday, Friday, and I believe we've got. I got to look at the economic calendar. Sometimes they stagger CPI 2 weeks, but I'm going to go ahead and look. I think CPI is next week, and that'll be the next big, really event that we need to watch. This NFP number, I would crumple it up and throw it away. Don't put much stock in it. I don't believe the markets are. I think everybody in the markets right now, any economist worth his salt, has to be looking at those employment revisions to last November and December, and they have to be laughing at them. They have to be. Those numbers are those numbers. I'm just going to say it. Those numbers were revised upwards for political purposes. There's no question about it. Get ready for a downturn in NFP. Get ready for it, and it's coming this spring. And the beautiful thing about that is it's going to bring a lot of pressure, and we're going to have some great trades. We're going to be able to buy pullbacks on a lot of things, and maybe even grab some really high impact shorts, which is what I'm looking forward to as well. All right, everybody, fantastic session. Let me see, T. Marina, how much on average does gold move after the NFP report? I really don't have any numbers for you, T. I don't have any numbers. I know right now it's running at that NFP low, so don't be surprised if this thing gets wiped out, the 5.813. To do that, you need markets that move, and when they flatline, it's a crapshoot with crossover strategies. We're going to talk about that as well in the future. That's for sure. CPI is Wednesday the 12th. Yeah, sounds good. We'll have CPI live for you then. I'll be loaded up, ready to go there. So be sure to come on back. We'll do some CPI live. But as far as how much does gold move after NFP, I don't know. It's a good question. Typically, you see a big break, and then you see another big move right around the U.S. Open after NFP. I don't think we're going to see that today. I think we're going to be Chop City. I'm compelled to trade range strategies the rest of the day, so I'm going to be looking for those types of setups. Better get to it. All right, guys, I'm going to sign off. You have a fantastic weekend. Super Bowl Sunday coming up. I don't know if you have any hot picks, or you're going to watch the game or throw a few bucks down on it. I'm interested. Pretty much everybody's back in the Chiefs. Keep an eye on those Phillies. keep an eye on those Eagles. The Eagles play very good defense, number one defense in the league. Defense always beats offense. The question is, can anybody beat Mahomes and the referees? I took Philly in the points. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.